You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hey, Jim. It's great to be back.
Well, we're going to do a little bit of showbiz here, recalling that great movie, Crouching Tiger, Hidden Dragon, and you say the palladium and platinum markets are just like that.
You know, I got really inspired today looking at the PGM market, and the palladium closed today above $900 for the first time in about 13 or 14 years, the nominal close, and the platinum is not as strong, but when I looked at the two of them at different lengths of the different charts, I found some things that I hadn't totally observed before. And, you know, I think the Crouching Tiger, Hidden Dragon analogy is a good one. That particular movie, which many people who've listened have seen, is the highest grossing foreign film in the United States of all time, and I absolutely love it. I watch it about once a year. It's just incredible. Anyway, the palladium is interesting because I looked at the charts, and it has had three $50 declines over the last few months, and every one of those was completely made up and went on to new highs. And so we talked about the first one when it was announced that the PGM strike had been settled supposedly in South Africa. And so that dropped $40 in one day right there on that, and then it dropped a little more and turned around. And we've had two more of those, and each one of those has formed a higher high and a higher low, which is the hallmark of a bull market. And with this second punch above 900 today, I think it's really getting exciting. And the nominal high for palladium is about $1,100, which was some years ago. And I did a finger spread target by looking at the 25-year chart. And the finger spread target is about $1,350 from where would be a new all-time high by several $100s. When it gets there is anybody's guess, but I actually don't think that will be the ultimate high. So I went over and looked at platinum, which frankly has looked pretty sorry lately, or certainly quiet. And if you look at the daily and the weekly and even the yearly, it looks weak because it looks like it just keeps declining. And I went to the 5-year chart, and the darn thing looks like a rising berries wedge. But on the 25-year chart, it looks like a massive multiple-year descending wedge or rectangle. Now, the rising wedges are generally bearish, and the descending wedges are generally bullish. And so I looked at what it's done over the last few years, and my feeling is the upside target is about $1,100 higher than where it is now, which is a little above $1,400. So it would not surprise me to see $2,500 or $2,600 on this, and that probably will not be the ultimate high for platinum either.
Wow. So what's turned things around for both those metals?
Well, the thing is, they've been coiling. They've been building up, a resilience to the forces of darkness from the so-called forces that try to hold the prices down. And of course, you know, it's a little bit less nefarious than that probably because, as David Morgan has so often said, the market is stronger and bigger than all the forces arrayed against it. It's just that it can take a long time and you get worn out or depressed and quit before that happens sometimes because it takes the price a long time to decide where it's going to go sometimes, but when it does, and that's why I think it's exciting about the PGMs, they've taken a long time in spite of well-known fundamentals that are very powerful for it, and now they're starting to show us what they're made of. And so to me, this will be a more enduring, powerful market that will go higher and last longer than most people expect. And the thing is, platinum and palladium have often moved to their own drummer, so we don't necessarily expect them to move in tandem like gold and silver does, where there's a 90% correlation, according to Adam Hamilton on gold and silver. But we looked at the last market in platinum and palladium, and they were separated by a couple of years. I don't think it'll be that way this time, but the point is, you just can't expect them to all move at the same pace. But they're both going to move, I believe, much higher over the next 3 to 5 years at least.
David, how secure are these supplies to have you this optimistic?
Well, there don't seem to be any short-term solutions, and by short-term, I literally mean over the next few years. Eventually, all bull markets, which are originally founded on a valid concept or premise, become invalid because the price moves to the point where that premise no longer works, or something intercedes to take care of the supply issue, or the demand tails off, whatever. And at some point, there will be an end to this bull market. I don't know whether it'll be 5 years or 10 years or whatever, but it is not going to be a forevermore bull market. Ultimately, it will roll over and die. And there are some things that could bring that about. And again, I don't think that they're going to happen over the next few years, but they will eventually take a toll on rising prices. As Rick Rule says, the cure for high prices is high prices. If we get a rational government in Zimbabwe that opens up their massive stores of PGMs and they start producing, that will bring out supply in the market. Ivanplatz under Ivanhoe Mining has huge deposits that are relatively shallow and amenable to mechanized mining rather than the way it's done in South Africa, where they have people in a cramped, tiny stope trying to bang out the ore by hand. If that goes into production, or when it does, that's going to put a lot of supply in the market. We could have unexpected breakthroughs in nanotechnology use, and we could even at some point will be probably mining asteroids, which might be 10, 15, 20 years out. But listening to a couple of talks at the Vancouver conferences, there's an individual there discussing that there's more platinum and probably palladium on one asteroid than has ever been mined in history in the world now. So if one of those was dragged back to Earth, or they took the mining and brought it back to Earth or something like this, that would really change the supply piece. But I think the last two things I mentioned are longer term, but they could very well happen. And any of those things happening over time will eventually kill this bull. But I think it's a minimum of 3 to 5 years out before that happens, based upon what we know now. And you can't talk about things we don't know, but based upon my cloudy crystal ball, that's what I think. So I think it's important for investors my advice would be, which is going to be the same thing I want to do with the stocks I'm following, is buy when it's hard, which is you buy into severe weakness, like when we had these $50 drops, and sell when it's hard into great strength. Avoid margin. Decide how much beforehand enough is enough for you. Don't be a glutton. And don't drink too much of your own or anyone else's Kool-Aid. Don't ever get to the point where you think this thing is going to go on for the rest of your life, because it's not going to happen that way.
You're saying when the dragon shows up, though, we want to be careful what kind of a dragon it is, whether it's an Eastern dragon or a Western dragon. You
bet. That's really true, Jim. And you know what? I think that either a tiger or a dragon can win in this market. But the key is that the tiger, of course, makes one kill and that's it. It doesn't go out and try to kill the whole herd and get a broken leg in the process. It takes down one animal and it's satisfied for a week. The Eastern dragon is a more amenable dragon, and it spends its time in the spring and summer up in the sky being kind of benevolent and helping people out. And in the winter, it goes underground and goes dormant. But the problem is with the Western dragon, as we know from our Western history, the Western dragon likes to collect gold in a big cave more than it could ever use, and it collects maidens, which it can't ever have a relationship with as far as I can tell. And it collects so much that it really upsets people in the nearby neighborhoods, and sooner or later, a hero knight goes in and either fills it full of arrows like a pincushion and kills it, or hacks it to death with a sword. So my suggestion is be a tiger or an Eastern dragon, but try not to be the Western dragon, which indiscriminately tries to collect wealth and never figures out how much is enough, and eventually attracts the forces of distribution and ends up being taken out.
David, thanks a lot for chatting with us.
You bet. It's been good speaking with you, Jim, today.
And I'll go out and check the sky for a dragon right now.
Sounds good.
My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. You can send comments to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.